on behalf of Belvedere Associates, welcome you all to another session of Belvedere Talks. Before I begin this session, I would like to thank all our investor and for, for sparing their valuable time on this weekend. This session will be of 30 minutes followed by 20 minutes of Q&A session. I request participants to share their question via chat and direct them to our host, Ashish. Lastly, a vote of thanks and closing note by Belvedere. With Indian market touching new heights, investors may wonder whether one should celebrate or one should get cautious, whether one should invest more or wait for market to correct, whether one should rebalance their portfolio. In today's session, apart from answering all these questions, we would also help you understand why looking at macros are important and why India is trading at premium as compared to other emerging economies across the world. Today with us, we have Mr. Ramesh Mantri, CIO, White Oak Capital AMC. He is a CFA chartered member and holds MBA from Faculty of Management Studies, Delhi. He has more than 19 years of experience in investing and financial analysis across different sectors. Over to you, sir. You can share your screen.
Thank you, Manurajji, and good afternoon to the Belvedere management team and all the clients. Good afternoon. I hope you're all well. I'm sharing a presentation. So can I just share the screen?
Yes, sir.
Yes. So I think the big question that I'm supposed to answer and talk about, and are you able to see the screen? Can I get a positive confirmation?
Yes, sir, we can.
Okay, thank you. So the big question that I have in front of me is markets are hitting an all-time high. What does it mean for markets as investors? Before we talk about the future of India, I think it's important to talk about the past of India, because many times the answers to the future lie in the past. So before, we talk about the future, let me talk about the past of India. And first, what happened in India, let's say in the last 35 odd years. So let's go back to 1989, when we, for the second time in our history, had a coalition government. And from 1989 to 2014, for straight 25 years, we had coalition governments. Whether that was government of VP Singh, Chandrasekhar, PV Narasimha Rao, Dev Gowda, IK Gujral, Vajpayee ji, Manmohan Singh, UPA 1 and UPA 2 under Manmohan Singh. The politics of this country was so interesting during that 25 years that regional parties, which even controlled 10 to 20 seats in the parliament. Sometimes it was from multiple parties from UP, sometimes from Bihar, sometimes from the Communist Party from West Bengal, and of course, the parties down south, right? With the likes of Jayalalitha and Karunanidhi and all, right? Often regional parties with 10 to 20 seats control the policy of this country, key policies. And whenever the leaders didn't agree or comply with their policies, the prime ministers, the governments fell. And that's why you had a number of governments that had shorter tenure during that election. So 25 years we have lived through a 25-year straight period of coalition governments. Look at what happened through those 25 years on the economics and the market side. Many of you think about today the Ukraine war when Russia invaded Ukraine. My understanding of markets and economy starts from when in August 1990, when Iraq invaded Kuwait. And honestly, both Iraq and Kuwait were key oil producers. So that war was actually more important. And actually, that war actually precipitated the balance of payment crisis of 1991 in India and the subsequent reforms that happened in India. So we've seen that crisis, that geopolitical crisis, the economic crisis, and of course, there was a stock market crash. We've seen the Asian financial crisis of 97. We've seen the tech bubble of 2000, the financial crisis of 08, 09, the 2013, the coal scam, the 2G scam, and of course, multiple challenges in the last few years, particularly the COVID. So we've gone through regular economic crisis. We've gone through regular market crashes or huge corrections. In terms of looking at the geopolitics, we of course all can worry about the geopolitics of today. But as I said, the period starts with the Iran-Iraq war, and then followed by the the Iraq invasion of the Kuwait, and then of course Afghanistan war. We had Kargil war. We had a proxy war with Pakistan for a long time, and you can say ongoing, right? We had seen multiple attacks on India, whether there's attack on Parliament, and of course, who cannot remember the live telecast attack on the Bombay hotels, right? So we've gone through geopolitical uncertainty. One thing that we all worry about India is oil prices. In the last 35 years, we've seen oil at single-digit prices. We've seen oil at $150, including when the Ukraine war started, the oil jumped by $50 a barrel quickly. The question to ask, I'm building all this background here, is the key question to ask is, forget about the recent political single-party rule of late. Even from 1989 to 2014, this country did well. And the markets did well. Why? The key question is, I think the answer lies in the fact that through the 30 plus years, our India economy GDP has grown at 6 to 7% per annum, had a average 5 to 6% inflation, and you get a nominal GDP growth of 12%. And please remember this number of 12%, because I'll come back to this 12% number later. So we've grown through this 30 years at 12% on nominal GDP. And by the way, that is exactly the sort of same returns we have got from the Indian equity market. So the question is, why did we grow at 12% despite the political instability, relative instability, not absolute, the economic and market crisis, the oil price volatility, and the geopolitics at work? So let me try to answer that question, because that is the answer that lies to the future. So I get inspired by lot by this quote from Bill Gates, that we always overestimate the change that occurs in the next 2 years, but underestimate the change that occurs in next 10 years. And I'll give you examples later about these changes. So fundamentally, what is growth? Growth comes from three things that come together. That's how countries grow. You need labor, highly qualified, capable, hardworking people, labor participation. You need risk capital for a country to grow. And you need to remove barriers to business, what we call productivity, or in India, we call it liberalization or reforms. And let me talk about the history of India, the economic history of India, and why the miracle happened in the last 30 years. See what happened, and when India got independent, we as a country were trying to struggle with availability of food. And many of you may remember the 60s and 70s and 80s Bollywood film, जहाँ पे एक common plot होता था कि माँ बाप अपना खाना नहीं खा रहे हैं, but बच्चे को स्कूल भेज रहे हैं, पढ़ाई करा रहे हैं, right? Of course, we no longer see that plot in the recent movies in the last 20, 30 years, because we can, as a country, no longer struggle with food. But this country, when it got independent, did exactly the same thing. When we were struggling with basic necessities, it chose to make long-term investments into the future. When we invest in education of our children, they become productive 20 years later. So, and I would urge you, all of you, if you want to understand more of this topic, I would urge you to watch this series called on Sony Live channel. You may want to note down this series called Rocket Boys. This is a story of three great Indians. Vikram Sarabhai, who became the father of India's space program. Homi J. Baba, who became the father of India's missile program. And one gentleman who later became the president of this country, Dr. APJ Abdul Kalam. I would urge you to watch this series. There are a few episodes on this, and even ask your children to watch it. It's such an inspiring tale of the early India. So when India got independent, we choose to invest as a country into the future through investment in universities, colleges, IITs, IIMs. That is what the big. So if you look at when the IITs got founded, IIMs got founded, a lot of universities, colleges came. That is the era, and it takes 20 years for that results to start kicking in, because that's how the lag between investment and education. So a lot of these smart people started passing out of from top colleges, IITs and all in late 70s and early 80s. Unfortunately, we were stuck with the socialism at that point of time, roti kapda and makan. So a lot of these smart people choose to go outside. India became NRIs, and in the process you have today Sudhir Pichai, who heads Google, Satya Nadella, who heads Microsoft, Shantanu Narayan, who heads Adobe. I would urge you to read 2 weeks ago an article that Economist magazine wrote. You'll find it on Google, that the Indian NRI is the most affluent and the most powerful, immigrant diaspora in the world. Those people send $100 billion to India so that India can create the infrastructure that we all need. They send $100 billion of savings every year to India. So that's their contribution. A few of those gentlemen, of course, remain in India and founded capital efficient businesses like TCS, Infosys, HCL Tech, Ranbaxy, Lupin Lab, Red, Dr. Reddy's and all. And then, so we had solved the labor problem, but we still, as a country, didn't have capital. And then the war, the Iraq-Kuwait war, triggered the economic crisis in India, the balance of payment crisis. And that actually triggered the economic reforms in India. So not every crisis is bad in our lives. In fact, sometimes crises are blessings. And I talk about more such things. Often we see in life, when we have a health problem, that's when we change our habits forever, and become healthier longer term in our lives, right? So every crisis is not a problem. Sometimes crisis can be blessings. So that's when we opened up this country and capital started coming in. I want to remind you, till 1992, there was one life insurance company in India. There was only one unit mutual fund scheme in this country. And we saw capital coming in across the board. With capital came management, with capital came expertise and technology. So 30 years ago, if you wanted to be an entrepreneur in India, passing out of college, you had three challenges as a person. The first challenge was that the family incomes were very low. If your family is struggling with roti, kapda, and makan, it's very difficult to become an entrepreneur, because you have to put the food on the table. I'm talking of 30, 40 years ago. Of course, there were still some brilliant entrepreneurs who figured out even in those challenging environments. The second challenge was the Indian market was small because of the socialist policies. And number three, there was no risk capital available in India. If you wanted to become an era and particularly set up a capital intensive business 30, 40 years ago, either you needed capital in friends and family, or you have to be connected, right? Now think about India now. If you're a young person passing out of college, one, family incomes are reasonable that you don't have to fight for roti, kapda, and makan, no longer. So you can choose to do your own thing. Number two, the Indian economy and the markets are become so big that you can try and scale ventures in India. And number three, we are the second most vibrant startup ecosystem in the world. Today, the Indian venture capital ecosystem is so strong that I would say today that if you are capable, capital will find you. That is the difference in India. And why is that important? Because the most successful capitalist country in the world is US. The greatness about US is that they back talent. They don't look at what it is. So some of the greatest entrepreneurs and some people that you all know of, right? Think of Google. The founders are not Native Americans, right? Spotify, coming from Eastern Europe. Elon Musk from South Africa. Even Steve Jobs was actually born to Cuban parents, right? So that is the greatness of America, because they only back capabilities. So I think India slowly, with this emergence of a risk capital, right, we are becoming more meritocratic as a country. While and of course it's a journey, it's a few decadal journey, but at least we are on the right path. And finally, productivity. Productivity in India is, see, we inherited the British bureaucracy as a country, and I would say over the last 75 years only made it worse. So this country has been shackled in the chains of, bureaucratic policies. Now, it's not that we cut the chains and shackles one day. We don't do that. That's not the Indian way of doing things. We loosen the chain every year and makes things a little easier to happen. Let me now give you one example. When I was doing my CA 25 years ago, the CA course, it was a challenge, and many of you might remember it was a challenge to file an income tax return. Assessments took 4 to 5 years. And if you were really lucky to get a refund from the income tax department, it would take you 2 years typically to get the check, to get the refund, right? After refund order came in. Last year, my brother filed a tax return. In 48 hours of filing the tax return, he got the refund in his bank account. That is the way India is changing, right? So when we combine all these three factors of growth, right, we are today stronger on every element than we have been in the past. Whether the quality of workforce, the fact that now everybody, at the kind of investment in education we're able to make, the fact that the risk capital is available, and of course, we are progressively, constantly improving removing the barriers to business, reducing the barriers to business. So that is why I have a lot of confidence that while we have done well in the last 30 years, there is no reason to believe that we can't do well as a country for the next 20 years. Now, that is about growth. But growth is not the only thing that matters for returns. And I'll talk about that later in the presentation, what else matters apart from growth for making money for investors. But it's much easier to today get convinced that we can, as a country, deliver strong, stable, long-term growth. When I used to, as a child, learn to play football, the teacher used to always say the best way to win a football match is not to score a self goal. Let the other team score a self goal, right? So we will lose this opportunity in the next 20 years only if we as a country score self goals, right? Otherwise, we will not lose this match. Number two, so let me talk about some very interesting things that are happening in India. And I've talked about some of these slides, so I'll not get into the details. What is the progress we're trying to make? Where we are making progress and where we are not making progress. There's currently an attempt to reform the labor laws in India, where about 1,400 labor codes will become 4 labor laws in India. This is in the works currently. Of course, may not happen in the current term of the government, but hopefully in the next term of the government. And there'll be no paper filings under the new labor law. And everything will go digital, just like you see. The place where, while we have seen some reform, but I would say as a country, we still lag behind, is the ease of getting justice. I think I would still say courts are it's still difficult to resolve commercial disputes in India, any kind of legal dispute in India. That is where I would like to still see a lot of progress for this country in the years to come, in terms of that's where we lag as a country today. Now, one of the most interesting stories that have started turning up now in India, we are seeing early signs of the renaissance in manufacturing. For a country to become a manufacturing powerhouse, you need 4 things to come together. One, you have availability of low-cost skilled labor. Number 2, you need infrastructure, both energy and logistics. Third, you're doing ease of doing business. And fourth is the economic and political stability. India always delivered relative to our peers, the first and the fourth, which is availability of low cost and skilled labor, and economic and political stability as a country. We have in the last 20, 30 years improved a lot our power situation. Logistic is still where we still lag our peers, and I'll talk about that in the next slide. Ease of doing business, we are making progress, but we have a long way to go. So today, with the world wanting to diversify their supply chains outside of East Asia, particularly China, Taiwan, right? What is called the China plus one. India, along with a lot of other countries, including, I would say, Vietnam, Thailand, Malaysia, have an opportunity to take that business, and we are seeing some early signs of growth. We have already seen the last 5, 7 years, huge growth in chemicals industry because of the China plus one. And now, at least I'm seeing as we speak, a huge boom in electronics manufacturing in India. Already, Noida has become the smartphone manufacturing hub in India. And I happen to be, on Thursday went to Surat, and one of my fellow passengers happened to be a Indian who had seen the electronics manufacturing industry for 20 years. And he said that he had seen the last 20 years migration of the electronics manufacturing industry from US to China and Taiwan. And now he believes the next step in the migration is to India. So, and already bottoms up, we're seeing massive growth in electronics manufacturing in India. Logistics is where we are behind the world. Today, as a country, our logistics costs are 50% higher than the rest of the world. And that is why we're seeing a huge focus now on investment in railways, on roads, airports, ports, gas pipelines. When the Mumbai-Delhi Expressway gets inaugurated next year, the travel time from Bombay to Delhi will halve from 2 days to 1 day. That only means that the same vehicle and the driver will become more efficient, and it means lower fares on goods fares on that route. So again, it'll be a huge jump in productivity in the most important economic corridor of this country. So we as a country are very focused, making a lot of progress on logistics. One of the interesting dimensions of doing things in India is earlier, there were only a few state governments that were very aggressive in promoting, investment within the states. We have seen, I still remember because I come from the state of Andhra. Chandrababu Naidu was in many ways an early pioneer of promoting investment in the state. And of course, we all know the initiative by Prime Minister Narendra Modi in the state of Gujarat. The good part of the Indian story is now is that number of states are now becoming very aggressive in inviting investments, into their states, even states that are lagged behind a lot. For example, UP, right, in the last few years has made a lot of progress, held investor roadshows in Lucknow, in Mumbai, and all over the world. So it's good to see not just one or two states becoming aggressive inviting investment, but that trend has become more broader in India. Now, India, while we always make these reforms, sometimes we make these big leaps as a country. One of the most interesting leaps we made in the world is what is called the UPI, where suddenly from a very backward, antiquated payment system based on cash, we are one of the best state-of-the-art global payment system now. Similarly, let me talk about another initiative that few of you may not know. So many times when we have to buy a phone on Amazon, right? Let's say if I had to buy a 5G phone on Amazon, I'll go to Amazon, search for 5G phones, review the phones, pick one of the phones that I want to buy, add to cart, and add my address, pay online, and typically it'll get delivered in 2 days. Can you imagine this thing being done for industrial land? The same thing. So let me give you a case study. The state of Madhya Pradesh, their industrial body, now puts an entire inventory of all industrial lands in the state of Madhya Pradesh on their website. You can go to their website, identify the parcel of land, add to cart, pay online, and in 30 years, you will get the lease in your name. Can you imagine this someone doing? And by the way, this miracle is not coming from a progressive state like Telangana or Gujarat, but is coming from Madhya Pradesh. So that is the India story that is exciting to talk about. So I hope I've convinced you that India is another space where a crisis is creating an opportunity to India is India, as you know, is among the top 2 importers of defense equipment in the world. For a country that can send the most effective mission to Mars, it is disappointing that we as a country can't build our key weapon systems. And in a changing world, and the fact that we don't have friends on both sides of our border, right? tells you that we need to be self-sufficient. So this Russian invasion of Ukraine, where India realized we have such a large dependent on Russian, defense equipment, right, has made us now very aggressively focus on indigenization. So now we're seeing very huge focus in India on defense indigenization. I think the benefit of defense indigenization, not the fact that our imports will come down and will create a lot of jobs, is the fact that defense labs end up creating a lot of technical capabilities and end up creating a lot of R&D. Some of the most interesting innovations in the world have actually come from defense labs. So the mechanism through which we are talking internet actually was an initiative of the US defense labs. Even as basic product as a microwave came from defense labs. So as we invest in defense, the engineering and technical capabilities of this country will improve a lot, which will help a number of other industries. So now the question is, we probably got convinced on growth. What about, but India market to महंगा है और हमेशा महंगा रहता है. They're always expensive. So is growth enough for returns? I would ask you to compare this slide look at this slide very carefully. In the last 20 years, China has grown much better than India. 7% versus 9%, right? Yet look at the two numbers on the below. Indian equity markets in dollar terms over a 20-year period have delivered much better returns than the US, than the Chinese market in US dollar terms. Our P multiples are also a lot more expensive than China. The question is why? Why a country with significantly higher growth delivers lower returns and have traded at lower multiples? And the answer is growth is not enough. So what matters for generating returns? And this is an important question to ask. See, we have seen across industries, the most expensive stock is not the company with the highest growth. Often we see in companies or management with the highest growth don't even trade at the highest multiple. The reason is different. What matters, just like at a company level, when you value a company, what matters is the corporate governance of the country and what is the quality of underlying assets in the company. Is it a great long-term structural growth business with very high corporate governance, or a highly cyclical business with the iffy management? That same thing applies to countries also. Just like we value companies considering quality of assets and corporate governance, the same dynamic applies to countries. So one of the interesting things that even Indians don't appreciate about India is that we might still have potholes on our roads. We might still have infrastructure that is behind a lot of our competitors. But we actually have the institutional infrastructure of a mature democracy. And the quality of companies and businesses and entrepreneurs in India are superior to the rest of emerging markets. And that is the single biggest reason why Indian markets trade at expensive valuation to emerging markets. Let me expand this quickly. So what is the soft infrastructure of a country? The soft infrastructure is that you have institutions like judiciary, central bank, and election commission. I still remember about 30 years ago, we used to have this story in India, ye booth capture ho gaya, elections. Now in India, at the time of elections, we might disagree with the election outcomes, but none of us disagree with the process of elections in India. That is the change in India happened last 25 years. We have an independent central bank and a Supreme Court whose orders even the government has to follow. And when all these things come together, it means strong protection of property rights. If you look at all the emerging markets, India is among the top 2 countries in terms of protection of property rights. Once a foreign investor was telling us that, India mein to, even a farmer can go to court and stop a road construction. India is so difficult and so difficult to do business. So actually I said, you don't realize it's a blessing, not a liability. I said that if a small farmer can protect his property rights in this country, then you as a foreign investor, your rights also will be protected. But if the farmer can't protect, then your rights will also not be protected. So we've seen the case of Vodafone in India, where they have actually won cases. The Supreme Court passed orders against the government of India. They won arbitration against the Indian government. And yet they continue to do business as normal. We have not become vindictive against a foreign investor. That is the power of India's soft institution. In India, we don't doubt at the end of election whether a chief minister or prime minister, when he loses the election, will hand over power or not. Can you imagine this in China, Russia, Middle East, and many other countries? This doesn't happen. In fact, I like to say between Israel and Japan, India is actually the true stable democracy in the entire of Asia. So this is the power of this country. And all major countries have gone through regular economic crisis, currency crisis, debt crisis, political coups. We've always had a stable democracy. So countries which don't have higher stability, companies which have higher stability, trade at higher multiples, as simple as that. And we are consistently rated as one of the most democratic countries in the world. In US, people are challenging elections, not in our country. People are challenging vote counts. We don't challenge vote counts no longer in this country. That is the power of India. And finally, all countries which are democracies, their markets tend to trade at much higher multiples historically than the rest of the world. So, autocracies like China, Russia, Saudi, Turkey, they tend to trade at, for the same businesses, they tend to trade at lower multiples than democracy, because in a democracy, your property rights are safe. Nobody can take away your house. Nobody can take away your land, even the government. That is not true in autocracies. And finally, the mix of assets. India, the average share of PSUs is 6 to 8%. The average of emerging markets more than 20%. And of course, China is north of 25%. In every sector in India, the PSU companies trade at significantly lower valuation than the same private sector companies. Just look at the multiples of, let's say, in the oil sector with private companies. Look at the valuations of PSU banks versus the private banks. So when you have less of PSUs and more high quality private companies, that means optically, mathematically speaking, your market valuations will look different. But remember, you're comparing apples and oranges without looking at the mix of how much PSUs and private companies are there in the market. And finally, companies all over the world, private sector trades at a significantly higher multiple than the private sector companies all over the world. PSUs, not only in India. This is not an Indian phenomenon. And whenever the world has gone through a crisis, Indian economy has remained more resilient in a downturn, including COVID. So I hope I've given you a reason that countries which have protect property rights, have better asset qualities, and are more resilient in downturn. This is exactly the same thing that happens in companies. They tend to trade at much higher multiples. That's the reason India trades at much higher multiples than the rest of the world. So, and of course, I just want to give you perspective. We are now the top 5 economies in the world in terms of GDP. By the end of this decade, we'll surely be the top 3, right? We are, lagging China about 13 to 14 years today. And by the way, the economic reforms in India started exactly 13 to 14 years after China did, right? When they dismantled socialism post a crisis, and India dismantled socialism post a crisis. So we are on the same path. So let me, talk about one element of investing that is less understood. Over a 5-year period, out of 150 mid-cap stocks, 70 of the mid-caps remain mid-caps. 10% of them become large cap, and 40% of them actually become small caps. So people are focused on identifying this big winner, which by the way, only 10% of stocks will happen, right? To take that brilliant decision in life, right? I think we should spend a lot of time as teams first to figure this out. कि कहाँ नुकसान होने वाला है? Where are the big disasters? The mid-cap basket on a typically on long-term averages on a 5-year tends to double. 40% of the mid-cap on a 5-year basis actually half. And in life, it's much easier to not take bad decisions than to take good decisions. So when you think about your portfolios, first thing, क्या नहीं करना है? क्या गलतियां नहीं करना है? Then you start figuring out what right thing to do. Anytime you are early in life, first you should figure out what you should not do. Then you should figure out what you should do. So I think defense in investing, identifying where things will blow up, where things will not work out, is very critical investing, right? And just look at this slide. 5 mid-caps companies exactly 5 years ago with large institutional shareholding. And I'm sure many of you will be able to identify, a private sector bank, a jewelry company, a housing finance company. What happened to these stocks? And these are not random stocks. These are companies with large institutional shareholding, either by FIs, domestic investors, or both. So why a defense is so important in investing? Why the ability to first identify what can go wrong in portfolios is critical. Now, coming to valuations, current Indian market is trading at the average of long-term valuations, and particularly when I mean the last 9 years. So Indian markets have traded slightly at premium during the last 9 years. You can call it the political stability premium, right? Last 9 years, right? Now we're trading at that same level. And so to put it differently, while we are currently trading at 5% above the high that got hit 18, 19 months ago. But I want to tell you, while markets are 5% higher than that level, earnings growth has been more than 25% over that period. So you can say markets are 20% less expensive than what they were 18 months ago, even after hitting the all-time high. Or to put it differently, markets are 20% cheaper today, right? It's the same thing, right? Now the question is, markets are hitting all-time high. What should we do in our portfolios? Now, I want to tell you, in the last 25 years in India, markets have hit an all-time high 15 years out of 25 years. So hitting all-time high is a phenomena that happens every 18, 20 months or 2 years in India. It is like the season. In fact, it's a problem if it does not happen in Indian market. Why if it does not happen, if the markets don't hit an all-time high in India, it's a problem. It is not a lack of opportunity. Let me explain you simply through a very simple example of a real estate investment. Let us say you invested in a great office in DLF Cyber Hub, right? You made a brilliant investment and you invested a few years ago at 10,000 rupees square feet. I know abhi 10,000 mein nahi milega, but I'll just give you a simple example. And you are making 1,000 rupees a rent a year, 10% yield on that commercial property. Now your asset is brilliant and you got some Infosys like tenant who is a brilliant tenant in your office, who will not go away irrespective of what happens to the world. And you have a very interesting arrangement with that person, that instead of getting the normal 5% hike, you're going to get a 12% annual hike on rent from that person every year. So at the end of first year, instead of making 1,000 rupees, it's 1,120, right? Next year, it becomes 1,250 because of compounding of 12%. And the third year, it becomes 1,400 rupees because of the compounding of 12, 12, 12. The question is, can that real estate value at 1,400 rent remain at 10,000? We all know the answer is no, because then the property prices have to start moving. Because if rents have gone up by 40% over a 3-year period, then capital values have to start going up, because this is an A quality asset with a A quality tenant. A quality asset is India. and the 12% is the GDP growth of it, the earnings growth. Why? So I believe, it's my strong opinion, that we're unlikely, if you stay invested in equities at least for 3 years, you will start having good experiences. And invariably, in most of the 3-year periods, you will see a market hitting all-time high. So all-time hitting all-time high is just a function of compounding. Expect that regularly to happen. And next time anyone tells you कि market all-time high hit कर गया, बाजार में पैसा डालना है डालना, tell them every last 25 years, 15 years, market is at an all-time high. This is a regular phenomena when your capital is compounding. Now, we all focus too much on the market as investors. And I'll give you a very simple example. Let's say when people take the dog for a walk, right? Invariably, most other people, onlookers, focus on the dog. And the dog, sometimes is running ahead of the dog walker, sometimes behind, sometimes left, sometimes right, and occasionally barking on someone. Everybody looks at the dog, but people miss this basic fact. Finally, the dog only goes where the dog walker takes him for a walk. The dog is the market. The dog walker is the economy. Don't focus on the dog, focus on the economy. I'll stop my formal presentation here and open the floor to questions. Sorry, I've taken a little more time, but.
Thank you, sir, for such valuable insight and helping us understand what is fueling the Indian growth story. Welcoming Ashish to moderate the Q&A session.
Thank you, Ramesh. Thanks a lot, as always. You have made my job, our job, easier to talk to our clients. And by giving that mantra of that what we should avoid, that is the most important thing. I think we always keep on discussing with our client that they should avoid the herd mentality, they should avoid the other things, that if somebody is investing, why you should not invest. It all depends on your risk appetite, your goals and all. So that's the thing which we always keep on discussing with our clients. I have few questions this thing. So I understand that markets are all-time high, and it's a phenomena, as you told me, because of the compounding effect and all. So, but for a person who's coming right now in the markets, he wanted to invest start afresh, and he wanted to, let's take a hypothetical example, 100 rupees he wanted to invest. So how you should allocate that? We ask them to, he should go for in one go, staggered manner, structural things, how we should do that?
Great. Thank you, Ashish ji, first for giving me this opportunity again. See, I think the question here is how much of the portfolio is getting invested into equities at that point, not the 100 rupees.
Let's say 100 rupees investing into equities.
No, but what percentage of their net worth or total portfolio? Because it's the balance of debt, equity, and other asset classes that matter. Let's say if it is someone is allocating now 10% of their portfolio to equities, I'm just saying, then go in all in. There's nothing to think about. If it is 20% or it's better to stagger it over a 6-month period. If it is 20% or more, 30% or 40%, then stagger it over a 12-month period. But if it's 10% number, just go in now, and then what product to go in is a function of the risk appetite. It's fundamentally a function of the risk appetite of the investor, and you're better positioned to guide the investor than us.
Perfect. Thanks. So you mentioned about the self goals which government should avoid. What all the investors' self goals also that should be avoided while investing into capital markets?
Yeah. So one thing is, great question, and before I actually come to the investor self goal, I would urge all of you and whoever is on the call, including people, first make sure you have a great large life cover for yourself as an earning member, term insurance policy that takes care of everything that happens if, God forbid, anything happens to you. Take a very large health insurance cover. Please don't take 5-10 lakh health insurance covers. God forbid if there's a complex medical issue. आजकल 25 लाख 50 लाख का बिल तो बनते ही दिखता है, right? And I'm sure 5 lakh is not going to impact you. And I'll be surprised how cheap large insurance covers are. You can actually get a top up for 1 crore of health insurance cover at very low prices. And it's even tax deductible, So first talk of defense. First protection करना है, उसके बाद grow करना है. In terms of investing, I think first the biggest error people make is invest in very mediocre products. You know, uh, and coming to that example, insurance is meant for protection, not for investment. There are much better investment products available. Secondly, don't make investment because आपका neighbor कर रहा है, fads है. At any point of time, whatever people around you talk too much, avoid the herd mentality, avoid what others are doing. So मुझे याद है आज से 1.5-2 साल पहले सबको स्टार्टअप करना था. 1.5-2 साल पहले सबको क्रिप्टो करना था. That was a question I used to get, right? अभी कोई पूछता भी नहीं है क्रिप्टो और स्टार्टअप के बारे में, right? Don't do the herd thing. Diversify, you know, understand your risk appetites. Because बोलना रिस्क एपेटाइट और उसको एक्सपीरियंस करना बहुत अलग चीज होती है लाइफ के अंदर में. लाइफ में ना स्टेइंग सेवन लॉट ऑफ पीपल से आई हैव हाई रिस्क एपेटाइट, इट ओनली मींस कि मुझे रिटर्न ज्यादा चाहिए पर मुझे रिस्क नहीं चाहिए, राइट? सो एक्चुअली नो बिहेवियरली व्हाट योर रिस्क एपेटाइट्स आर. मार्केट 30% गिर गया and I would give you a test of risk appetite. How did you feel and behave in March 2020? That tells a lot about your risk appetite. Were you fine with it? Did you add more money or did you get frightened? 3 states. That tells a lot about your behavior. Fourth, I would say is this is a profession, just like a lot of areas of expertise. This is a space that requires expertise. Just like people hire a good doctor, a lawyer when they have a legal or a health problem. Spend your disproportionate time identifying a great financial advisor, and then listen to that person. I spend my time finding a great doctor and then I don't become my own doctor, but wo jo bolta hai main karta hu, right? Same for a good gym instructor, just spend time finding the right service providers and don't try to self-administer the things here. And see, money is a बहुत interesting चीज होती है. Money is a very emotional thing. I still remember this famous line from this movie मुन्ना भाई, right? उसमें ना डॉक्टर बोमन ईरानी एक बहुत अच्छी लाइन बोलता है कि मैं किसी की भी सर्जरी कर सकता हूँ, बट जब मुझे अपनी बेटी की सर्जरी करनी पड़ेगी तो मेरे हाथ धुजेंगे. My hands will, so that is the problem. It is sometimes better for someone else to handle our money than ourselves handling the money, because they are unemotional. It's the same problems that doctors face when they have to, do a surgery on their own child, right? You become emotional about it. So, and these are the basic elements. And don't invest too much for tax planning, for a very long-term tax plan. See, I'm a chartered accountant by education. I can tell you can never be sure 10 साल बाद इंडिया में tax regime क्या होगा, right? You can't even tell 3 साल बाद क्या tax regime होगा इस देश के अंदर में. So don't optimize your investment too much for tax regimes. In fact, buy a product because it's good risk and return. Tax can be another reason to invest in that product, but should not buy products on the tax regime. And I think if you do these basics, and by the way, if you're putting too much money in fixed income, right, effectively you're giving the money to the banks. The banks finally give it the money to entrepreneur. और फाइनली पैसा एंटरप्रेन्योर को ही जा रहा है. थोड़ा सा खुद भी इंडिया की ग्रोथ स्टोरी में डायरेक्टली पार्टिसिपेट करो. We are one of the most interesting stories in the world. The world wants to invest in India, and we Indians don't invest enough in India. And particularly for some of the financial products, understand it is just not return in life. It's the ability to access liquidity. For example, mutual funds, the advantage is you can get money in your bank account in 2 days, right? When some of the asset classes, when I hear people investing a lot of money, particularly real estate, and I myself made some errors in real estate investing myself. So I've also learned it from the अपनी गलतियां करके सीखा हूँ, right? कि you can only sell real estate when there is a buyer, not when you want to sell real estate, right? So that's all. Of course, there are lot more things I can talk about, but I can move to the next question.
Sure. There's one interesting thing from your insights and all. What are the 3 books an investor should read?
Oh, great question. So let me talk about the 3 books. So first one is, and I would ask you to read this book. It's a very simple book published about 100 years ago. It's called The Richest Man in Babylon. I think in personal finance, And see, there's a reason I'm recommending a book that's 100 years old, because the greatest ideas in the world don't change. You know, the greatest ideas, see, जब हम बहुत सारी life में ना, for example, ideas of good health, all have been captured. Large part of good health habits have been captured in Ayurveda that has been around for thousands of years, right? Some of the great ideas have already been captured by the world. We are not trying to discover something. There's another book I would highly recommend, and I would urge you, if you some of you, to even listen to this book. You can download. Actually, you can download from Amazon audio books for free. वो दो book तो free देते हैं. And even when you're taking a walk or driving, you can listen to this book. There's a book called Psychology of Persuasion by Morgan Housel. It's a brilliant book. So these two books are about personal finance. It's extraordinary books, both of them. One is a recent book, one is a 100-year-old book. Both are brilliant bestsellers. The first book बहुत कम लोग recommend करते हैं actually. The second one is a popular book. And then to make you excited about investing in and entrepreneurship and equity markets, the Peter Lynch wrote a book called, Beat the Street. Actually, you can read his first book, One Up the Wall Street. It was again written long ago, about 25, 30 years ago. That's the first book in my career I read on equity investing. And from that, I fell in love with the markets in investing. मैंने अपने college में ये मतलब ऐसे book पढ़ी थी, and after that I fell in love with investing. And in fact, the book tells you that sometimes you can invest well, even personally, by just observing things around you and identify great companies and opportunities. And particularly, if you have a child and all, at the age of 15, ask them to read this book called The Richest Man in Babylon. I have two boys, and I'm making sure they read this book. It's a very important basic books on personal finance. It is not important to know history, कि वो king ने क्या किया था, because that will probably not impact our lives. It's not important to know complex, even though very few people are going in life are going to use complex trigonometry, but everyone of us will need to use personal finance. So these topics are more important in their lives than one chapter of social studies or even mathematics, So make sure they read and understand these things. That will change their lives. Yeah.
Thanks, Ramesh. I always wonder that why don't we have any chapter on the personal finance during our school days?
In fact, I want to, at some point in my life, want to, convince the government and make sure that we can take out some other chapters from other subjects. I don't want to increase the loads on kids, but just have, a minor subject on personal finance, and probably thought through cartoon characters and make it interesting storytelling, not make it a boring finance subject, right? I wish everybody's taught early in their life about insurance, credit cards, loans, basics of investing, diversification, those compound interest, those ideas they're taught.
I have another question, last one, Liz. I wanted to rephrase this thing that it's all about that ETFs and all, that the role of active and manager in generating alpha, and why we should not copy what is happening in West. It's like there's a West phenomenon, investing in ETFs and not for index funds and all. Just wanted to rephrase that.
Yeah. So actually, क्या है ना, हमारे साथ प्रॉब्लम क्या है ना इंडिया में, हम ना हमारी सारी आइडिया अमेरिका को देख के आती है. मतलब जनरली हम ना हर चीज में अमेरिका को देखते हैं और अमेरिका से सीखने की कोशिश करते हैं. एंड पर्टिकुलरली फाइनेंस जैसा डोमेन वेयर आई एग्री अमेरिका इज अ टेम्पल ऑफ कैपिटलिज्म. तो क्या होता है, उनकी आइडियाज को अडॉप्ट करना चाहते हैं which are sometimes 30, 40, 50 years ahead of us, right? So many times, instead of looking at just America for inspiration, look at East, look at Japan, look at China. See, actually China is a great model to think about, because they're about 14, 15, I would say 13 to 15 years ahead of India. So if you were to learn from a lot of the world, maybe look at China on the East, look at some of the East Asian countries, and let us understand. I was just talking to someone recently, lot of things that have in America we don't even want ever in India in our lives. Boss, I don't want 1.3 guns per capita.
Yeah,
of
course.
there are a lot of things of America that you never want in our lives. Actually, in India, I wish I always tell in my life that I've never known someone in my life who has a gun, right? In my social circle. And America has 1.3 guns per person, as a country, right? So those ideas we try to copy from America when they are 30 to 50 years ahead of you. See, for example, the mutual fund industry in India or the institutional capital market, scale up is only a 10-year phenomenon. America में 40-50 साल से हो रहा है. So the ideas of efficient market will be relevant 20, 30 years down from here, but not here. The Indian active managers have an excellent track record. In fact, आशीष जी मैं आपको ना ये वॉल स्ट्रीट जर्नल का आर्टिकल भेजता हूँ after this, and I would urge you to circulate this table to all your clients. This is an article published by the Wall Street Journal 5 years ago where they looked at the performance of all active managers across all major markets. Indian managers had the best track record of beating the benchmarks and also the most consistent across all major markets. And by the way, that's published by Wall Street Journal. Mera opinion nahi hai, right? I'll send you the article. You can circulate it. So let us not pick ideas that are too ahead of time. हर idea का एक time होता है. And कुछ idea तो हमें कभी West से अपनानी भी नहीं है. For example, the fact that they don't care for family members, right? Very individualist societies. We don't want many ideas from the West to come to India. Honestly, I don't want it.
Perfect. Thanks for all this wisdom, nuggets of wisdom, Ramesh. Thanks a lot. I will keep, request you keep on disturbing you for some of these kind of sessions in the future also. Thanks. Thank you very much. Over to you, Manu.
Thank you, Ashish ji, and thank you entire Bellwether team, for giving me, and the entire clients. Thank you for joining on a Saturday, and I hope you have a great weekend. Thank you.
Thanks. Good day.
Thank you, Ashish, for moderating the queries. And thank you, Ramesh sir, for your valuable insights. It would be our pleasure to extend our gratitude through a token of appreciation. With this, we conclude today's our session and would like to thank all our investor and speaker for taking out their time. Taking out their time. It was a great pleasure to have you all on our common platform, and your insights has given us more information and knowledge. Wishing you a great weekend. Stay safe and stay invested.